Welcome back to the Investing Markets and Money podcast, brought to you by the Armchair Trader. This week we're talking about mining, specifically iron ore, and joining us on the podcast we have John Welborn, who's chairman of Fenix Resources, which is listed in Australia. So great to have another Australian miner on the podcast. It's been a while since we've spoken to one. Welcome, John.
Thanks, Stuart. And that's terrible to hear. I'm glad to be representing such an important part of your audience.
Yeah, we have a lot of Canadians on the podcast, but not so many Australians. So it's great to be catching up with an Australian mining project again. Fenix, can you give us quick listeners who probably won't be familiar with the company a general overview of what you guys do?
Sure. We're an iron ore miner in the Midwest of Western Australia. So if you think about Western Australia, pretty much the western or left-hand side of the Australian continent. We're a huge iron ore exporter. But most of that iron ore, the big BHP, Rio Tinto, Hancock, and Fortescue mines, are up in the Pilbara, so in the northern part of the state. We're only just north of the capital of Perth, for people who are familiar, and we're a small-scale iron ore miner. We mine the highest grade ore body in mainland Australia. And what separates us from others is that we haul our iron ore on public roads using quad road trains. And we operate our own port facilities. So we established the business in 2020. We raised $15 million from the Australian Stock Exchange. And since then, we've paid back $65 million in dividends to those shareholders. We've invested $200 million of operating cash flow into the business. We'll probably end the quarter with about $50 million in cash. And we're currently expanding from one mine doing 1.3 million tonnes per annum to three mines doing 4 million tonnes per annum. So it's a unique story in the scale that we operate and the type of business that we run. And it's one that we're very excited about in an interesting growth curve.
And your flagship asset is the Iron Ridge mine. I'm presuming that's where a lot of this very high grade iron ore is coming from.
Yes, that was our flagship project. We started that in 2020. And since then, we've also commissioned the Shine Iron Ore Mine, which is a similar scale, 1.2 million tonnes per annum. And we're in the process of starting our third mine called Beebyn W11. And we're hoping to get that going in the September quarter.
And Western Australia, I mean, you've touched on it already, but just how important, if you look at the global iron ore production, how important is Western Australia to the overall picture?
Very important. And I often joke that if you think about the Earth on its axis, I'm surprised it's not tipping slightly, the amount of material we're moving from the southern hemisphere up into the northern hemisphere. Western Australia exports more than $60 billion worth of iron ore annually, and most of that goes to China, and most of that is the big producers that I mentioned earlier. It is very significant to the Western Australian government income in royalties and the WA economy, and also very significant to our federal economy and balance of trade, and also globally. So the seaborne iron ore market is more than 1 billion tonnes. And a substantial part of that is coming from Australia, with obviously competitors such as Vale in South America and Anglo American in South Africa. But most of the world's seaborne iron ore originates from Australia. Now, in that market, Fenix is quite a small niche player, but we're really enjoying building a business.
And who's buying your iron ore when you ship it out? Is that presumably going to China as well?
We ship our iron ore in Panamax vessels, so they're 60,000 dry weight tons. So if you see one, they're absolutely enormous, but they're quite small compared to the super Cape size vessels, which can hold more than 200,000 tons that export out of the Pilbara. So most of our iron ore does go to China, but because we ship in smaller boats, we also can provide iron ore to regional Asian steel mills that are close to ports that can't berth a Cape-sized vessel. So Vietnam, Malaysia, Korea, we do have a diverse customer base, but in reality, our product is always priced on a China basis because they are the biggest consumer.
And one of the things that really interested me about Fenix is the fact that you're not just a miner; you also have a logistics business, which is really interesting because most miners we speak to don't have anything like that. I mean, you've got the haulage and you've got the port facilities as well. How did you end up with all that?
The company strategy has really changed. At the start, it was very much a pop-up shop. Iron ore prices were high. We had this very high grade ore body, but stranded. So, Mark Twain once said that a miner was just a liar standing on top of a hole in the ground. But unhelpful for this purpose. But miners do start standing on top of the rocks that they own, whether they're gold or iron ore or lithium or whatever commodity, and then working out how to monetize it. So that's exactly what Fenix went about. To monetize our rocks, we were 500 kilometres away from the coast, so we needed to develop a method of getting the ore to a port and then a method of getting the ore onto a boat in that port. And rather than spending billions of dollars building a railway or a port, we've managed to secure facilities at Geraldton Port that were previously built by a mining company called Mount Gibson, and we've developed a very unique quad road trade system that can haul iron ore cheaply on public roads. As usual with most things, the answer to a question is by necessity, because otherwise the rocks would still be in the ground. We've developed a new system, and there really are three pillars to Fenix's business. We have a mining business. It's actually the most simple part of our business. We operate really simple, low strip ratio quarries. One or two diggers and four or five mining trucks, compared to some of the complex extractions that's going on in the industry. This is very simple, and we, blast and mine, crush, and screen rocks that we then haul. And that's the second pillar of our business is transport logistics, road haulage. And we haul all the way to facilities at Geraldton Port, on-wharf storage sheds, conveyors, unloaders, and ship loaders. And that's the third part of our business, port services. And so it was by necessity, but the growth of the business is really going to be driven by our skills in logistics.
And does presumably that helps you to keep costs down because you're owning that entire logistics chain?
Most miners don't like to talk about feasibility studies they published 5 years ago because they're usually a bit embarrassing. So, Fenix published a feasibility for Iron Ridge in 2019 that said we could export iron ore for a C1 cash cost of 85 Australian dollars a tonne. And at the time, the iron ore price was about 140. So that was sort of the margin that you would need. And that feasibility study was roughly $25 to mine, crush, and screen the ore, $50 roughly to haul it to Geraldton Port, and $10 to put it through the port of Geraldton. So you can see already how significant logistics are, and compared to mining, they're a much larger cost. Now, currently, we're doing that for $75. So there wouldn't be another mining company, particularly in iron ore, where we've seen double-digit cost inflation that's been able to do that. And it's because we are hauling ore for less than $30 against a feasibility study that said we could do it for 50. And we're also achieving great outcomes in mining and our port services. So yes, it is fundamental to our business that we have collapsed what would otherwise be a contracted service where there was a big margin and an inefficient capability. We have purpose-built our port services and our transport logistics very specifically for the one job, which is to haul iron ore as cheaply and efficiently and safely as possible. And we're doing a great job.
And am I right in saying that you actually use those facilities, you actually help other miners as well, that those are available not just to yourselves?
And that is another unusual element. Most miners want to own and control their own infrastructure, and are really only interested in the rocks that they're standing on top of, to continue my analogy. We're much more a service-oriented company. We started a joint venture with a business called Newhaul, which was founded by one of Australia's most successful transport entrepreneurs called Craig Mitchell. We consolidated the ownership of that business, and Craig is now a fellow executive director in the company and its largest shareholder as a result of that transaction. So we have a mindset about service provision and transport logistics. So we're very happy to unlock the value in deposits. Obviously, the best reward we get is unlocking the value of our own deposits because we're capturing the value across mining, haulage, port, and ultimately marketing and sale of the commodity to customers. But yes, we also provide transport, logistics, and port services to third-party customers, and that offsets our cost and is also because of our um, capabilities there. We can also make a good margin while providing a better service to other miners.
And you do have some other projects, mining projects as well. Can you say a little bit about what those are and what you're planning to do with those?
Well, as I mentioned, we've Iron Ridge is running, Shine is running. We're about to start W11. We've made a takeover bid for another ASX listed company called CZR Limited. This has another stranded deposit in the southern Pilbara, so not in the Midwest. And it's a company that, like Fenix's Iron Ridge project 5 years ago, needs an efficient iron ore miner, and then it needs a road logistics company, and it needs a port services company. So the requirements of their project, the Road Mesa project, it was originally identified by Australia's most famous and wealthiest prospector, Mark Creasy, and he's the controlling shareholder of CZR. And so we believe that's a really great match for our skills in mining and haulage and port services. And so we're currently in the middle of an all script off market takeover bid for CZR. So we'll have to see how that lands out. That's a really interesting growth opportunity for the company.
And how's the company looking from a financial perspective at the moment?
We're making money. Um, Obviously, like every listed company director, I would claim that the market is totally irrationally pricing our stock, and we have which I'm trying to be more patient and believe that we will get a re-rate on the back of our production expansion. Financially, the current iron ore price of just more than 100 US dollars a ton, which equates to a little bit more than 150 Australian dollars a ton, is very good for Fenix. I mentioned earlier that our C1 cash cost at the moment is around 75 Australian dollars. We're looking good. We're making money, and we've also got a very strong balance sheet. We're quite conservative. We've hedged a portion of our iron ore at strong prices out to December. And I mentioned that we've invested a lot of cash flow into the business. So across those three pillars, we now have a lot of infrastructure assets.
And another thing I wanted to ask you about was where you've mentioned it already, but in terms of the global iron ore market, iron ore prices, I mean, when we speak to other miners of other metals, they're always muttering darkly about the Chinese economy, slowdown in China, how that's going to affect their fortunes. And then obviously we're speaking in a week where the US has decided to slap tariffs on just about everybody out there. Where do you see iron ore going in sort of the rest of this year with all that going on at the same time?
Well, I think one of the unique things about Fenix, and particularly the partnership between Craig and myself as executive directors of the business, is that we're building a commodity-based business in an environment where we're not necessarily bullish on the iron ore price. Um, in fact, a lot of what we've done and how we've structured the company is based on the fact that while we're enjoying high iron ore prices, we don't expect them to continue. Almost every mining company will say, you should buy my gold mining company because gold's going up, or you should buy my lithium mining company because lithium's going up. However, we believe that we can build a business that's sustainable through the iron ore price cycle is the first thing. And that's a good example of our outlook on iron ore is that we hedge, and we hedge during cyclical parts of the season where steel mills are paying more for iron ore, and that allows us to have some certainty on future cash flows. So that's just a Fenix related thing. Talking more generally about the commodity itself, I'd warn people, first of all, never ask a miner of a commodity what they think about their commodity, because almost certainly they'll paint you a rosy picture. And I can see you laughing at that, Stuart. Um, However, having said that, I have a more positive outlook on iron ore today than I've had for some time for some of the reasons you've mentioned. Um, Iron ore forecasters have had a view that iron ore prices are going to drop for years, and every year they've been proven wrong. And iron ore has continued to perform well, despite the fact that the construction industry in China has had a big downturn, and the biggest consumer of steel as a sector in the industry is construction. However, what we're seeing globally is obviously gold going through the roof because we're in very uncertain times. Another reaction to these uncertain times is in increasing military spend everywhere. Estonia have announced that they're uh, going to invest 5% of GDP in defence, and the Trump economy, tariffs, and other things are leading to all sorts of unintended consequences. Um, but I do think that that results in China continuing to stimulate their economy, and I think defence spending relates back to steel production. So while there might be a reduction in construction, there are other sectors, particularly machinery and other areas of the economy, that's going to sustain steel production at current or even increasing levels for some time to come. So I think the outlook for all commodities is actually very positive, iron ore included.
And another thing I wanted to ask you, I mean, it's something we've asked miners before on the podcast, but not one from Australia. And this is about a lot of mining companies make a big deal about sustainable mining and how they're a sustainable operation. And for mainstream investors and a lot of private investors, they can't kind of put that together. How is mining sustainable? From your perspective, what does that look like in terms of an Australian miner?
You must have heard me. You must have heard me speak before, Stuart. I've always found it highly ironic how often the mining industry talks about sustainability. Most mining companies have a sustainability officer. Let's be honest, your question indicates my own belief. Mining is the most unsustainable business there possibly is. We define finite ore bodies and then we extract them as soon as we can. By definition, it is unsustainable. Uh, I think that it's a bit like life. We all try and live our lives without endlessly thinking about the fact that none of us are getting out of it alive, because it's a bit morbid. And miners sort of tend to do the same by couching everything in the terms of sustainability. Um, at Fenix, we try and be really real about what we do. Currently, we burn 1 million litres of diesel a month in our operations, and we're really trying to look at ways that we could reduce that just from a cost perspective. If you're trying to couch all of the things that people hide under the term sustainability, we also recognise that we mine relatively small ore bodies, and we do it very efficiently, so they end pretty quickly. So we're looking around for ways that we can partner with people who are sitting on top of other rocks that we think we can market for them. And that's one of the reasons we do third party logistics, and we're open to all sorts of joint venture and acquisition and growth terms, including the takeover of CZR, is about how can we make sure we've got enough runway underneath us to keep going. Uh, but most importantly, we're a partnership business, and that is about respect for each other within our business, but also all of the stakeholders, from the traditional owners of the ground in which we work for the shires and other road users, from the people in Geraldton around our port, for our customers, for our shareholders. It's about recognising everyone and trying to make sure that we're doing the right thing. That's how we sort of see what most miners term as sustainability.
And before we let you go, because I realise it's Friday evening in Australia now, can you just give us some perspective on what investors can expect from the company going forward? I know you've mentioned CZR already, and I know it's also difficult to really talk about some of the projects that you might have going on. But if we look ahead over the next sort of 6 to 9 months, what can shareholders be expecting from you guys?
We're busy expanding. I think we're going to surprise the market in the next couple of months when we commission our third mine. We've over the last 5 years, we've created 300 jobs. We've achieved a better than outcome on every feasibility study from a capital expenditure and operating outcome perspective. We're in the process of commissioning our third mine. It's going to triple our production from 1.3 million tonnes to 4 million tonnes. And that's our focus for the rest of the year, is to really just mine iron ore, haul it, and ship it to our customers in a strong market, and make sure we do that. Obviously, the completion of the CZR takeover would give us a whole new asset base to expand into, so that's quite exciting. And our ambition is just to get on and get ahead with the job and make sure we meet our own expectations. And sooner or later, the market will catch up to the value that we're building in the business. We've got a great team, and we're having a bit of fun down here in WA.
Fantastic. Well, thanks very much indeed for coming on the podcast today and giving us the rundown on Fenix. That's been really interesting.
No, Stuart, delighted to have the interest. Thanks very much. Enjoyed the chat.
You've been listening to the Armchair Trader podcast. Make sure you visit our website, www.thearmchairtrader.com, for your daily dose of financial markets news, and sign up to our free newsletter there.